Back. It's almost 9 weeks now. We have three engines still running, and this is real money on the line. It's not paper trading. It's real money. Small account, my money. And this week the numbers dipped a lot, so I want to talk about that. But first, the channel is at investing, so every day is Saturday. So do you know what FU money is? I think a lot of you might. You've probably heard of it. I'll say it without saying it. But it's not about being rich, and it's not about owning a yacht. It's about having enough money put away that if your boss walked in one day and made you upset or was disrespectful or made you mad, you could look him in the eyes, smile, and just walk out. And not because you're reckless, but because you built something that gives you an option or gives you options. But here's the thing. Most of us were never taught that. We're taught something completely different. So we're taught like to go to school, get a good job, buy a house, fill up that house, then spend money maintaining that house. Then later on, maybe buy a bigger house and fill up that one too. And look, there's nothing wrong with that. If you have excessive money and it genuinely makes you happy, that's a good thing to do. But for me personally, I would rather create memories than dust off stuff that I don't even use. So I've moved a few times over the last few years, and I keep moving stuff that I don't ever use. And I just keep moving it. All I'm doing is moving it around. So those are the things I'm trying to sell on Facebook so I can go ahead and invest them. I wish I'd never bought them in the first place, right? But I did. Some things are new in the box, but I don't need a bigger house. I just need a reason not to dread Monday morning. So think about it. We accumulate so much. I have 23 Phillips screwdrivers, 23, and not because I need them all, but because we as consumers we're conditioned to buy, fill space, upgrade, maintain, and repeat. And then the whole time that money could have been working for us, adding interest and growing over time. So that's what this challenge is really about. Not just building wealth, but building freedom to step away, to be able to say no, to choose what your week looks like without a paycheck forcing your hand. I know we always think, oh, I got to make this next check. If I don't have this check, what am I going to do? So let's check the numbers. But before that, let's take a look at this disclaimer. And I'm not going to read it all out loud, but if you want to pause this screen, you can take a look and read it, please, because I am not a licensed financial advisor. But I will leave it here for a second. All right. So if you're new here, real quick, it's just I use the same starting amount, three different investing strategies running side by side for a full year. I also have an options account as well that I'm showing on the side. And so there's no guessing, no vibes, just data. So I have the growth income, an income engine, and a safety net. Those are the three that I set up and labeled them that way. So each one is doing its own thing. So let's check the scoreboard here. All right, so we have the growth engine, which is at 15.99.65. That was up 0.49% on Friday. That contains VGT, VXUS, and VTI, and it's down just under 0.5%. But stay with me because the week over week is going to tell a different story. And then we have the income engine at 1593.46, up 0.44%. And then that one contains AIPI, JEPQ, and ROCQ. And that's up 0.44%. That was probably the best mover of all three this week. The dividends are reinvesting, and they're just happening right there in the background. So every payout also just buys more of that stock. And then we have the safety net at 1558.43, up 0.12%. And this one contains USHY, IBHF, and SCHD, up 0.12%. It's just steady, calm, rock solid, doing exactly as it's supposed to do. Now let's take a look at this one here. So on this one, I want to be transparent, and I don't want the numbers to be misleading. So on the surface, it looks like all three engines are up this week. The dollar values are higher across all three of them, across the board. But I added $120 to each engine this week. $30 from the weekly auto invest into each engine, and then $90 from the $270 that I made from DoorDash. So that's $120 per engine, $360 total in new money. So when you strip those contributions out, here's how the performance actually looks. So growth engine is really down $48.92 because it was kind of a red week last week. And that's negative 3.2%. And that's after removing the $120 that was added. The income engine is down $42.04, down 2.77%. And the safety net was actually up $2.52 on a red week, 0.18%, after removing the $120 that I added. So the safety net basically broke even on its own, and then the growth and income dropped. And that's fine. I'm not going to show you a higher dollar total and pretend the engines performed well just because I contributed money, and that's what actually did the heavy lifting. So the whole point of this challenge is transparency. So a dip is not a loss until you sell. So we're not selling, we're buying into each of these stocks cheaper on these red weeks here. So two things hit this week. So first, the weekly $90 auto invest that came on Tuesday. So $10 went into each of the ETFs, of the 99 ETFs across all three of the engines. And that's the same day every week. I just auto invest that. And then secondly, the DoorDash money, that was $90 total, split $30 into each engine. Actually, $90, yes, 90, 30, yeah, $30 into each ETF within that engine. Actually, so yeah, $30 into the growth engine, $30 into income engine. Actually, no, that's $90 into each engine. So $30 into each ETF within that engine. So it's a little error there. So that's $180 total deployed this week between the auto invest and the DoorDash contributions. So, and then the income engine, for example, gave a dividend of $3.55 on June 25th, and that went right back into it. So that's the snowball just building up, and then every payout buys more shares. And then the side hustles, money, gig work, and none of it's just going to sit in a checking account. Every dollar is going to have a job. All right, so here, like I said, a dip isn't really a loss until you sell. So you haven't, made any money or lost any money until you sell it. So the automatic $90 this week bought more shares than it did last week. So I got more ownership for the same price. And then these engines are still running. No positions were closed out. There's a lower number on the screen, but that's not a realized loss because I haven't sold anything. So this is normal. The market always breathes. It always goes up. They pull back, then they go up again. So I think the money's made is kind of when it pulls back and you're buying when it's lower. So the year-end result will hopefully show us how that's all done. We'll get to look at more of it 12 months over time and see how it completely plays out. So basically, we just want to stay the course and just trust the blueprint. And this is kind of week 8 going into 9. So all three engines are still running, still feeding them every week, still buying in, even as the prices dip. And I hopefully they'll dip a little more, but not too much. I don't like seeing the red weeks, but I don't mind buying during the red weeks. But every dollar's working in the background. It just gets that one step closer to that Saturday feeling. So no Sunday night dread, no alarm. You don't have to set yourself, just the options. So drop a comment. Let me know if you stayed in, if you bought more during the dip, or if you kind of sat on the sideline just waiting. Curious to see where you guys land on that. So subscribe and follow at Investing So Every Day is Saturday, because every day should feel like a Saturday. So I'll see you on the next update.